Welcome back to Smart Simple Savings. And as we get into this new year, I kind of want to reset and get back to the core idea as of why I started this channel. I started this because I wanted to be able to provide anyone that watches these some smart, simple ways that they can save money, they can find and have the future that they want in retirement or even before if you want to retire early. I wanted to create some ways and show you how to use your money for your benefit and to live the life that you've always dreamed of. One of the core ways to do that is your retirement account, whether that's your 401k or you have an outside brokerage account that you're investing money into. And one of the best ways you can do that is with a Roth IRA. And so that's what we're going to talk about today because the Roth IRA hasn't actually been around that long. The Roth itself started in 1997, and then the Roth 401k, which we're going to talk about at the end of this video, has only been around since 2001. So there's a lot of people out there that are nearing retirement that for a good portion of their career, this didn't even exist, and they didn't even know about it until recently. I actually had a conversation with a member of our gym who has some financial prowess and knowledge, but didn't really know much about the Roth because I don't think it's talked about near as much as it should be. And so, what is a Roth? So, a Roth is a retirement account that allows you to contribute after tax dollars, which means the dollars have already been taxed on your paycheck. You can contribute that money into that Roth where it will grow tax free. When it comes time to withdraw, you can also withdraw that money tax free. So it has some huge benefits in retirement. Now, you can't withdraw from that until you've had it for 5 years or to the age of 59 and a half. So there are some limitations on that. But at any time, because that money has already been taxed, you can withdraw any contributions at any time without a penalty. There is a penalty if you need to draw them before 59 and a half. So, who can have a Roth? As long as you can prove that you have income, you can have a Roth. Now, it can't be something like Social Security only or investment income. It actually has, you have to show that you have a earned income according to the IRS. Now, if you can prove it, you have an earned income at 12 years old from babysitting or cutting grass or shoveling snow or anything like that, where you can prove an income, you can have a Roth. So if you have kids that are at near the age where they can start doing something to earn money, you can actually contribute to the IRA for them as long as they can prove that they have income and they can keep that money in their savings account. But it's a good way to start setting your kids up for maybe a future that you haven't had, and that you can provide that and help provide that for your kids by getting them started on this process. So, how is it different than your traditional 401k or 403b? So, in your traditional IRA type account, that money is going in pre tax. So, you're getting a tax benefit today, but you will be taxed in the future because it's going in pre tax. It's not count towards your taxable income when it comes to filing your taxes. Now, a Roth, you're paying taxes on it today, but you're getting that money tax free in the future. So it is a great idea to have both and able to balance that out. So if you think you will have a higher taxable income in the future, go ahead and start contributing and open up that Roth today, because I don't ever see the government significantly lowering taxes. They are always going to go up, and we are always going to have them. Now, there are some limitations on the income level of who can have a Roth. Now, for 2023, if you are filing your income taxes as a single, that limit is 138 to 153,000 on your adjusted gross income, and for 2024, that is going to be 146 to 161. If you are married filing jointly, that is between 218 and 228, and for 2024, they're increasing it from 230 to 240. But here is a great thing that you have up until the tax deadline or when you file your taxes to contribute to 2023. So if you're someone that gets a bonus in February, maybe even March, you can take that bonus, apply it to your 2023 Roth contributions, and depending on your filing status or what your income level is, you may even get a deduction for those Roth contributions. So money you earn in 24, you can contribute to 2023 up into that limit. Now that limit for 2023 is 6,500 per person. So 6,500 is the limit you can contribute each and every year. They're going up to 7,000 for 2024. Now, if you're over the age of 50, they have what's called a catch-up contribution. So that is an additional $1,000 on top of the minimum. So for 2023, if you're over 50, you can contribute 7,500, and when it comes to 2024, you can contribute 8,000. Now that is per person, so you and your spouse can each have your own Roth IRA and contribute up to that limit. It is not a combined household, depending on how you file. You can each have your own. Now, what if you make over those limits? What if you make over those filing statuses? There is still a way for you to get into a Roth, and it's what's called a backdoor. So there are one of three ways. You can take an existing IRA and convert that into a Roth, or you can go open a traditional IRA, contribute the money to it, and within a few days have that via that institution convert that money into your Roth. And you also have the option of taking a 401k that you have from a previous employer, or even talking to the institution that houses your 401k or 403b and see if they will convert part of that into a Roth for you. Now, there is a caveat to that when you convert the money from a traditional into a Roth, that money will immediately become taxable. So you will have to file anything you convert as taxable income in that year. So make sure before you do that, before you convert any of those funds, you know what that tax implication is going to be. So make sure you talk to a tax professional or whoever is helping manage that retirement account through that institution, and have a plan and know what your tax base is going to be on those funds when you convert it. Now, the last and kind of final holy grail of all retirement accounts is what's called a Roth 401k. But this is something, if you have the availability to invest in this, you need to today. Now, the way this works is this goes through your employer managed fund. Most funds that offer a 401k have all started offering a Roth 401k. A lot of times it's you just talking to your HR department, having them contact the administrator of the fund and see if that's available for you. My last two employers have had it, and so I've been taking advantage of it. So the way this works, it will go ahead and tax your dollars on your pay stub, and then that money goes into that 401k, that Roth 401k, already taxed, and then it will grow tax free, and then you'll be able to withdraw that tax free. And the great thing about the Roth, unlike a traditional Roth that does have either income limits and that contribution limit, there is no income limit whatsoever on a Roth 401k. So if you are an executive that is way over that limit, you can still have a Roth 401k and contribute to it, as well as taking that backdoor Roth option if you have a traditional IRA. Now, the income limits are highly increased as well. So for 2023, the Roth 401k contribution limit is 22,500, and for 2024, it's going up to 23,000. So you're looking at almost three times the contribution limit than a traditional Roth. And you can have both. I have a Roth that I contribute and try to max out every year for me and my wife. I also have a Roth 401k that I contribute to. And the IRS doesn't care that you have both, as long as you're hitting the max limit on you're not going over the max limit on each of those. But they have nothing to do with each other besides the name. Now, when it comes to investments in each of these, they are very different. So I have a traditional Roth through a brokerage account that I created that I can invest in. I can buy any stock. I can play options in there. The entire market is open to me. But when it comes to my Roth 401k, I only have available the same accounts that my 401k has. So you're going to be very limited on the different funds that you can invest in through your Roth 401k. But that doesn't mean it's not worth it whatsoever. Because the big benefit of having all of these different retirement accounts is when you get into retirement, you are able to keep your taxable income to a bare minimum. Your 401ks, your 403bs, a lot of those or all those are going to have a required minimum distribution that you have to take each and every year. Starting in 2024, they have removed that stipulation for a Roth 401k. So there is no required minimum distribution. So take your RMDs on the accounts that you have to And then any income that you need to live on over and above that, you can pull that from your Roth or from your Roth 401k and keep that taxable income to a minimum. Keep as much of your money in your pocket in retirement as you want to. So I know that was a lot, but biggest thing is look at those income limits maybe when you file your taxes for 2023 and figure out which one of those routes, whether traditional or a backdoor, or talk to your HR department about that Roth 401k. But I think you need to have at least one of these as part of your arsenal when it comes to preserving your funds, preserving your money, so you can live the retirement life that you have dreamed of and that you have earned. So share this video with someone that doesn't know about it, someone that you love, that you want them to live that retirement life they deserve. Please like, subscribe, hit that notification bell down below. Again, I'm kind of refocusing on the tenets of my smart, simple savings and why I started this. So keep a lookout for the next few videos that are just at the ground level of how to maximize your money and use all the resources that you can to live the life